Hi there, welcome to Market Tomorrow right here on ED9 on the Mumbai Center and Legal. The market snaps its two straight sessions of falls and sees a bit of a rebound. Late hour rally lifts the index above the 8100 mark ahead of the RBI credit policy. Global markets, of course, shrug off Italian referendum anxiety. FMCG and automakers shine in trade while IT stocks falter. Meanwhile, M&M gains after global brokerage firm Bank of America Merrill Lynch upgrades the stock to buy from neutral. According to BofA ML, recent correction in the stock is overdone, but risk-reward is favorable. In other stock news, Adani Group stocks are holding strong, or actually were holding strong after the management said that it had secured a milestone in planned $16 billion of investment in the Australian coal project. The group has won approval for part of Rail Link to service the proposed mine. In the meantime, Cotton Greaves also fell after the company extended talks with Powell's SPACO for sale of European power business. Delay is mainly due to non-receipt of regulatory approvals. Overseas power TND currently makes losses of about 45 crores per quarter. Analysts estimate a 50% EPS cut if the deal falls through. NMDC gained on receiving the nod for strategic investment of Nagarnar steel plant. The decision taken by the Cabinet Committee on Economic Affairs was communicated by the Steel Ministry today. In the meanwhile, Dredging Corp was down over 6% after the company reported net loss of 14 crores in Q2 compared with a net profit a year ago. We'll talk about the markets as always with voices lined up on the show. Hugh Albert Johnson talks about the Italian vote outcome and its impact on world markets. Mark Matthews does the same. Gautam Trivedi correlates the Italian referendum vote with its impact on emerging markets such as India, and Anand Tandon will particularly be talking about his fundamental outlook on the markets going forward from here. Amar Singh, of course, will be highlighting his technical strategies to help viewers approach trade tomorrow. But the question that we are essentially asking is, will the markets continue to be in consolidation mode? Will 8,000 to 8,200 be the 200-point band within which the Nifty struggles over the near term? Good evening to both of you. Amar, I'll start off with you first. What's your own sense on the charts of, which way the Nifty could swing?
Yeah, overall, if we look at Nifty, we've seen a pullback in Nifty from 7,900 levels. That was more of a short covering. And also markets are expecting some positive news on this 7th RBI monetary policy. So 25 basis points as is seems to be discounted, but whether it would be that or it could be more, that's something the markets are looking forward to. And the positive side is that Indian markets have not reacted too negatively on the Italian referendum results, so that's not positive. So going forward, what I see is that trading could remain choppy with 8250, 8270 on the upside Nifty. That would be a technical level to watch out for, because that would be where there could be selling pressure coming in the markets, and more or less it's a trading range that I see between 79, 20, 30 on the downside and 8,250 to 270 on the upside. So it's going to be a range, but yes, short term there is some positive bias, but till the time Nifty holds above 8250, 8270 on a consistent basis, we should not expect much of an upside.
Okay, what's your call on the Bank Nifty then, Amar?
Overall, as far as Bank Nifty is concerned, Bank Nifty continues to trade, I would say it's again choppy. Bank Nifty somewhere around 18,480, 500 levels. So what we are likely to witness is on the banking side, there is going to be basically it's that with the demonetization taking place, and also how it pans out for the public sector banks, that's going to be quite crucial. From a short-term perspective, 18,200 to 250 on the downside would be a level to watch out for on the support, whereas on the upside 18,750 to 800 would be a level of resistance. So it's more or less a choppy trading session without a clear lack of trend. But yes, the RBI policy and the wordings that come out as to the statements that come out, that definitely could have some impact on the market in the short term.
Okay, fair enough. Before anything else, before we get in a fundamental perspective as well, let's go across to Darshan, who has highlighted in the past two important strategy notes that came out in the market session today. One from BofA ML, which is hopeful of earnings recovery, and second one from Goldman Sachs, talking about a Nifty target of 10,200 in the next 2 years. Darshan?
First of all, it's Bank of America Merrill Lynch, and the second one is Goldman Sachs. Both of them are being cautiously optimistic. What Bank of America Merrill Lynch is saying that, they are saying that to beware of the extreme pessimism is there in the market, because they believe that neither the demonetization nor the stock prices are permanent. They will change. They believe that, the lower prices that have come in now offers a higher margin of safety to stock pickers currently. As far as the market is concerned, they see a 12% return on the Sensex till December end, and they see a December end target of 29,000 on the Sensex. They are saying that India's medium term cycle remains strong, earnings will improve, and as far as stocks are concerned, they prefer the banking play, they prefer the rural play, and they prefer large caps. Mid caps, according to them, are expensive. As far as the Goldman Sachs note is concerned, they have been extremely optimistic, but now finally they have managed to cut the Nifty target to 9,000 from the earlier 9,500. This is the 2007 end Nifty target, and for the next 2 years they believe that Nifty will hit the levels of 10,200. They see they remain overweight on India because they see that this demonetization process is recovery delayed but not derailed for them. They are saying that the EPS cuts have actually come in by close to 1%, and this was led by cuts in telecom, cement, autos and durable. They prefer infrastructure stocks, exporters, commodity sensitive, and they've raised pharma sector to overweight, so they are extremely bullish on the pharma space currently.
Thanks, Darshan, for that. Anand Tandon also joins in with his fundamental views in the market. Anand, great to have you on the show. Thanks very much for taking out the time. Your own assessment, on which way the market would trend as we close out the year, and how hopeful are you of a directional positive move into the start of 2017?
Well, can it go up from here? Quite possibly. Can it also fall? I think the probability is equally high. I think, one of the issues that we've kind of lost sight of is the fact that, the valuations are extremely expensive for the market, and what we are seeing right now is some bit of correction of that. But we've also seen some change in terms of the economics, which is that there is a possibility that near term the demand situation may not be as good. Consequently, it could be that the fall is only reflecting the lower earnings trajectory that some of the companies may report. So I think market continues to remain on tenterhooks. Just that the focus has shifted onto something which is not something that the companies can do, and therefore there will be perhaps in many boardrooms a sigh of relief that when they miss the numbers which the analysts are expecting, it will not be put down to them; it will be put down to extraneous factors.
What are you expecting from the upcoming RBI meet, Anand, in terms of clarity and communication on how well the system is adjusting to the remonetization process? Demonetization is done, but it's really about adding more to the system right now.
Well, I don't think RBI can really say too much. I think it's reasonably well known what is the capacity of the printing presses. We know how much money and currency can come back into the system. The real question is that, will all of that need to come back, or will there be a meaningful uptake in the use of cashless transactions? And I think most people are just keeping their fingers crossed, including the government, that the cashless transactions go up and the amount of currency required in the system need not go up to the same level. I don't think, frankly, even RBI would know exactly what to do because we are in uncharted territory, literally. Both in terms of the theory and the practice. I don't think we have seen a demonetization to this size anywhere in the world for many donkey's years. So there is no recent phenomena which you can kind of use as a benchmark. You have to play it by the year. What can they do in terms of interest rates? I think the market is leading for a change. Interest rates are already fallen. And RBI is basically trying to put a floor on it by taking away 100% of the money. So I don't think that whether they make a cut or not will matter too much, because the market is already signaling to you that they need to go down. And I think RBI would be wise to follow it. May not be very high, but at least at 25 basis points it seems to be in the offing. For the rest of it, I think you'll have to continue to react on a day-to-day basis.
Okay. Well, we'll take a break right now. When we come back, we'll discuss how to approach the markets tomorrow. In fact, there was a fair amount of wobbliness at the start of trade, which then got led into a relief rally as Europe recovered from the day's lows. And the big story at the start of the session was really about the big vote that that happened in Italy yesterday, the outcome of which was, of course, Italians voting for no constitutional reforms coming in, preserving the powers of the upper house, that's the Senate, but leading to the resignation of the current Prime Minister, Matteo Renzi. Earlier on, we spoke to a slew of experts to make sense of what this would mean for the ailing Italian economy, for the European region, for the euro, which has hit a 21-month low, and for emerging markets per se. The correlations out there. This is what they have to say.
I think you're looking at a relatively strong dollar over a much longer period of time, a significant uncertainty with regard to Europe. Is it going to survive in its current structure and form? Real questions about that, and that's going to translate into downward pressure on the euro. It's going to really translate into capital outflows, and I see no reason to believe that that's going to change anytime soon. The Italian vote is just, the referendum is just one step in a longer process.
Markets have risen so much in the last 3 weeks. They need some consolidation, and the Italian election is a nice excuse. So I think that the trend this morning of the markets in Asia going down will continue for the remainder of this week. I think the 10-year Treasury will be able to eclipse 3% by the first quarter of next year. So with that in mind, maybe a strong dollar will not necessarily mean weakness in emerging markets.
Welcome back. You're still watching Markets Tomorrow right here on ED Now, and let's quickly go across. There's a new issue in the offing. Yatin joins us with details on Laurus Labs. Yatin?
Laurus Labs, the IPO opens for subscriptions tomorrow. The IPO size is little over 1300 crores, out of which 300 crores is by way of fresh issue, and the remainder 1000 crores is offer for sale by the existing investors. If you look at the IPO price band, that has been fixed at 426 to 428 rupees per share, and post issue market cap at the current price band would be close to 4,500 crores, little over that. Of course, talking about the company, it has a strong R&D presence, headquartered in South India, wherein they have a lot of manufacturing facilities. So if you have companies like Natco Pharma, Aurobindo Pharma, all of these Hyderabad-based companies are its clients. Of course, they have a special relationship with Natco, wherein they enjoy 50-50 benefits in terms of the profitability for select product portfolio, and they have they have been mastering themselves in manufacturing of generic active pharma APIs. So that is their core competency. As far as valuations are concerned, the stock is valued at 38 times FY16 EPS. Moving forward, the management expects the growth momentum to continue, especially from the export markets and the US markets, and probably that is the reason why most of the brokerages we speak to are recommending subscribe to the IPO. And if you look at the grey market premium, that is close to 25 to 30 rupees per share.
Thanks, Yatin, for that. Anand, just come to you on how you're going to be looking at the rate sensitives right now. If one is expecting more rate cuts in a few, then do you think there's still a trading bias, given that some of these names have been bought and have done well from the start of the year till now?
Well, the rate sensitives really are three categories, right? There is the consumer discretionary, there is the engineering and so on, and then there are the banks and financial services. If you look at each one of them, I think the outlook for all of them because of rates may be positive, but the demonetization effect is largely going to override any of the things because of the rates itself. And also in many cases, especially consumer discretionary, I think the valuations are not something which will leave you too much on the table. Cyclicals like the engineering bits, except when they are driven by government orders, are not something which we are seeing an uptick in, because all said and done the private investment cycle is not yet picked up and is not likely to pick up anytime soon. And the banking sector has a very strange problem of plenty, which is that, right now they have more money coming in than they have people they can lend it to. And the RBI is also interested in, taking away most of that money without necessarily compensating for it. So net, as I said, though the longer term picture looks much better now than it was before, the reality is that the near term effect is not likely to be dominated by the interest rates. It is going to continue to be dominated by the demand side.
In that case, Anand, where would the bias be? I mean, how are you looking at playing this consolidation for the market? Keep it with the defenses in pharma and IT?
Well, obviously the rupee is showing signs of weakness, and the dollar is moving up, so that is clearly one place that you can be in, anything to do with exports. But the other option, the other way of looking at it is to see where the demand is unlikely to have changed very much. Anything to do with the government obviously qualifies, and therefore, all government expenditure related issues, companies especially in construction, transmission, distribution, all of that kind of stuff will continue to show reasonable growth, and there is no reason to change that. One interesting perspective, of course, is that it looks like the country has managed to successfully launder all the money. And if that is the case, then there is no reason to make a case for a demand destruction of any type, because if all of it is back again in the hands of people, in fact, I would argue that there is definitely a redistribution effect in the case of the laundering effect, and consequently demand at the lower end may actually pick up. So the non-discretionary part of the portfolio may actually do well after the current quarter, which because of the cash flow may be somewhat subdued. But going forward, that could be an area where again you may find the demand actually picked up as a result of this.
Yeah, that would be the case. Very quickly then, Amar, help our viewers with strategies to approach trade tomorrow.
Yeah, the first is ONGC. ONGC continues to be strong across all time frames, and any pullback is being used as a buying opportunity, and there is buying interest in this stock. So one can look at buying ONGC at around 293 levels with a stop loss of 287 and a target of 304. And the second stock to look at is Lupin. Lupin is again positive on the charts, and it has formed strong support around 1419, 1500 levels. So Lupin can be a buy at around 1525 levels with a stop loss of 1493 and a target of 1574. Once it takes out 1540 on the upside, you could see a sharp rally in Lupin in the short term.
Okay, and Anand, I know you may not talk stocks, but even so, in the broader markets or among the large caps, what would be your top 3 bets right now?
Well, the companies which have, for example, Maruti, right? The order book remains fairly robust, and even if you assume some of it gets cancelled or postponed, the fact is that they are still running under capacity constraints till at least January, by which time hopefully the demonetization effect would go away. Similarly, some of the two-wheelers may have a shock in this quarter because to some extent the cash has gone out of the system. But you still have, the correction is probably paying for some of that, and therefore the two-wheelers may still be again an area where you may want to go back on. Anything to do with rural India, I think the tractor demand will likely sustain and come back. I think fertilizers and seeds, etc., will be something that should not be affected too much. In fact, anecdotal evidence seems to indicate that except for a couple of days, by and large, nothing much has changed over there. I think broadly, perhaps real estate, which anyway was suffering from a glut, and related industries in terms of houses, in terms of home furnishing and home electricals, which were grossly overpriced. Barring these, I don't think that there is any great permanent damage that one sees in any of the sectors.
Okay, Anand as well as Amar, thanks very much for taking out the time to make sense of the markets and help our viewers with approaching trade tomorrow and in the near term. We wrap it up on markets tomorrow, but not before giving our viewers a slice of some expert opinion. Gautam Trivedi, who is the CEO of Religare Capital Markets, says time correction on the back of demonetization will continue in the markets for the foreseeable future.
Demonetization is an event that doesn't happen every year or even once every 5 years. It's happened after 38 years. And hence, this whole generation that's investing today in the stock market really doesn't have context to an event of this magnitude. So I think that time correction will continue at least for another quarter. I'm not sure about 2 necessarily, but of course a lot depends on the steps the Prime Minister and his government take to weed out more corruption. Two-wheelers as well as CVs have been hugely impacted by the cash withdrawal from the system. So I think these are sectors that we would look at. I think cement, there's some time before we start re-looking at it, because almost 2/3 of cement consumption, based on a recent report put out by Ultratech Cement, has been traditionally in the real estate space. So no matter how much the government does step up infra spending, and again we need to see, we haven't seen significant evidence of that yet, but as and when that happens, I think we might see the bottom of cement stocks.